When planning for your financial future, it's exciting to focus on savings, investments, and wealth creation. However, it's equally important to consider how you'll protect yourself and your loved ones from unexpected events. A comprehensive financial plan should include strategies to mitigate risks when life doesn't go as planned. One crucial element of risk mitigation strategy is your life insurance. If you have financial dependents that are reliant on you to cover living costs, life insurance is a key component of your family's financial security and estate plan. Surprisingly, many people insure their homes, cars, and even pets, but overlook insuring their most important asset, their life and the financial security it provides for their loved ones. In this video, we'll explore life insurance to help you understand what it is and how it works. Life insurance, also known as death cover, is a policy that provides a lump sum payment to your beneficiaries if you pass away or are diagnosed with a terminal illness. You might wonder, isn't that what funeral insurance is for? There is a significant difference between the two. Funeral insurance typically offers a much smaller benefit intended only to cover funeral expenses. Life insurance, on the other hand, provides a much larger sum insured that can help your family maintain lifestyle, pay off debts, replace income, and cover funeral expenses. The primary components of life insurance policy are the sum insured, premium structure, and policy term. Let's examine each of these components in detail. The sum insured is the amount of money that will be paid out to your beneficiaries in the event of a claim. This is the core component of your life insurance policy. Your sum insured should be based on a risk needs analysis. This calculation is individual to everyone's specific circumstances and considers how much cover your financial dependents would need in the event you were to pass away. It is common to get a default level of life insurance provided when a superannuation fund is established. However, this may not be enough to cover your needs and the premium may be above market rates. It is important you review your default cover and replace it with a tailored policy if needed. We discuss group versus retail insurance later. When considering your risk needs analysis, you should take into account the following: debts to be repaid, income to be replaced, expenses to be covered, and gifts. You can offset the amount of cover you need by existing assets you have. For instance, superannuation is paid out in the event you're to pass away, and therefore you may decide to offset the amount of cover you need with your superannuation balance. Where the policy is funded outside of superannuation, there is no tax payable on the benefit. Where the policy is funded inside of superannuation, it can generally be paid tax-free to a financial dependent. If not paid to a financial dependent, there will be tax implications which may need to be factored into your risk needs analysis. Life insurance premiums can be structured as either stepped or level premiums. Stepped premiums start lower but increase with age, reflecting the rising risks to the insurer. Level premiums start higher but remain relatively stable over time, increasing only with inflation or changes to the insurer's rates. The choice between a stepped and a level premium depends on your personal circumstances and how long you expect to need coverage. Stepped premiums may be more cost-effective for short-term needs, while level premiums can be beneficial for long-term coverage. Typically, we do not recommend level premiums as insurance is there to fill a short-term need. As your net asset position grows and your children become older, you should require less cover. This strategy of reducing your cover as your wealth grows goes against the reasoning behind locking in a level premium. There are some life insurance policies where the premium remains the same, but the level of cover automatically reduces as you get older. This is common in the default insurance policies offered by industry super funds. Our preference is that the policy owner remains in charge of the sum insured so it can remain appropriate for your needs. The policy term determines the duration of your life insurance coverage. Many policies offer coverage up to a certain age, often 99, but you can elect to reduce or cancel the cover at any time. You have the option to structure your life insurance inside or outside of superannuation. If you choose to structure your life insurance inside super, the premiums will be paid from your superannuation fund. If you structure it outside, you'll pay the premiums personally. It is important to note that when structuring life insurance through superannuation, you are not limited to the default cover offered by your super fund. You can shop the cover around and have the premium funded via an enduring rollover. Superannuation ownership helps to reduce the impact of premiums on your cash flow. In addition, your super fund will be eligible to claim a tax deduction for paying the premium. By paying the premium via rollover, the tax deduction will be given up front and only the net cost of cover will be rolled over. However, premiums deducted from your superannuation fund will have an eroding effect on your retirement savings, and any additional super contributions will count towards your contributions cap. Any premiums paid outside of superannuation will have a negative impact on your personal cash flow. The right choice depends on your individual circumstances, including cash flow, superannuation balance, beneficiary, and overall financial strategy. The cost of life insurance varies depending on several factors, including age, gender, health status, smoking status, and the amount of cover. All insurers price their policies slightly differently, so it's important to compare options to find the best deal for your situation. There are two main ways to obtain life insurance: through a group insurance policy, often via superannuation, or through a retail policy. While group insurance can be convenient, retail insurance often offers more comprehensive and tailored coverage. Retail life insurance policies are medically underwritten at the time of application. This means you'll need to provide detailed information about your health and lifestyle. While this process takes longer, it provides greater certainty at time of claim because any pre-existing conditions have already been assessed. To get a retail policy, consider speaking with a financial advisor. Advisors have access to a wide range of insurance products and can provide guidance on how much cover you need and how to best structure it. The underwriting process involves answering questions about your medical history, usually either with your advisor or directly with the insurer via tele-interview. Depending on your medical history and the amount of cover you're applying for, you may need to undergo medical tests or provide reports from your doctor. This helps the insurer accurately assess the risk of insuring you. If you have pre-existing medical conditions, the insurer may apply a loading, which is an increased premium, or an exclusion, which is a specific set of conditions that aren't covered, to your policy. For example, if you have a history of heart problems, the insurer may exclude claims related to heart conditions. It's generally easier to obtain comprehensive cover when you're younger and healthier before developing any significant health issues. This is why we recommend considering life insurance early in your career. Life insurance is a crucial part of a comprehensive financial plan. We include personal insurances in the financial housekeeping of phase 1 of wealth creation. It is an essential part of building a solid financial foundation. Covering yourself under a life insurance policy is not going to help you. It is a selfless act that will help your loved ones, those that are financially dependent upon you. It provides peace of mind should the worst happen. You don't want to add on financial stress at a time when emotional stress is high. If you think life insurance is an appropriate strategy for you, we strongly recommend you speak with your financial advisor. They can help assess the appropriateness for your particular situation. Please note, the information contained here is general in nature only and does not take into consideration your objectives, financial situation, or needs. As legislation is constantly changing, the accuracy of this information is only current as at the time of recording. Before relying on the information, you should check to see if the content is still relevant.